While the world has been tossed into a state of ongoing turmoil over the past several months, innovation across a number of different industries is charging forward. This is particularly true in the financial and fintech worlds, where the infrastructure that the global economy relies on is being stress tested from every angle. In some cases, this kind of pressure has caused almost instantaneous innovation to take place. More broadly, however, the last several months have made the need for innovation more apparent than ever. As such, while the coronavirus has caused a global reorganization of financial priorities, companies who are attempting to build the financial systems of the future have been diligently working away. Recently, finance magnates spoke to John Wu, president of AVA, about how his company is trying to do just that. AVA, which was founded by Cornell professor Emin Gun Sirer, is a platform that allows users to create public and private smart contract-enabled blockchains that are interoperable. In other words, it allows users to create their own tokenized assets that exist on their own blockchains. AVA is also designed to be backward compatible with existing Ethereum-based DeFi applications. John Wu joined AVA as president earlier this year. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast. Thank you so much once again for coming on the show.
Rachel, thank you for having me.
Absolutely. So I know who you are, but could you tell somebody who's listening to this who might not know who you are a little bit about what you do?
Sure. So I'm John Wu, and I'm the president of AVA Labs. AVA Labs is a team of, I think, exceptional distributed systems and network engineers. We are building a highly performant platform for creating and transacting financial assets. And if I tell you a little bit about myself, it'll highlight my path to AVA and why I think AVA is so great. Okay. So I started my career as a technology investor at places like Tiger Management, Kingdom Capital, and ultimately I ran my own fund that was seeded by the Blackstone Group. Now, when you work at these institutions, you kind of take for granted that the operations and the back office benefits are there for you and makes your life so easy and seemingly efficient. And all I had to do was focus on finding great investments. But once I started, I guess, looking for my own investing for myself and looking at what I call new alternatives and alternatives such as like crypto, private share investing in unicorn companies, or even being an LP in a hedge fund or private equity, that investor realized that the benefits that the institutions don't have. It is not easy. It's not efficient. There's a lot of paperwork, and there's a lot of things you have to jump through just to find these investments and then to access them. And then the workflow associated with it is just very cumbersome. It almost detracts your interest in investing in them. So back in 2014, when I first started looking at cryptocurrencies and Bitcoin, because it had just crashed, I started thinking about it, researching it. And once I decided I wanted to get involved, and that's a separate story, Rachel. If you want to talk about why I decided to invest in 2003, that's a separate question. But assume after I wanted to invest, I realized how many hoops I had to jump in order to invest for it in my fund. It was basically impossible. I mean, at that time, issues like custody, issues like settling this stuff, or even reporting and accounting and how you handle that, or even the systems to track, and there's no OMS systems for Bitcoin. So it was almost, if I invested it, I would not have done my fiduciary responsibility for my investors. So I just didn't do it for the fund, but I ultimately invested personally. That obviously was a great time to get in. And then all of a sudden, and then in 2017, I kind of saw the ICO boom. And well, I was astonished for two reasons. The amount of crowdfunded capital that was being raised was, to me, astonishing, and how quickly it was being done. It meant I was talking about the efficiency of it. And it's amazing how fast this money was being raised. But the second thing that I was kind of amazed about was, in my opinion, all of these ICOs were illegal raises, at least to a US investor. I mean, the fundraising of these ICOs, in my opinion, because they were private investments, should have followed the Securities Exchange laws of 1933 and 34, and then use the exemption standards of Reg D or Reg S and 144A in order to do that raise. But like I said, I thought creating and issuing tokens for assets was a great concept. It definitely was a very efficient way and allowed individuals to get access to things that they never could have in the past. So that led me to SharesPost. And SharesPost was a marketplace at the time, one of the larger marketplaces for private securities like Airbnb is today. Mm-hmm. And I was the CEO of the digital assets group, and my team and I were diligently plugging away, and we were successful in building a regulatory stack with the right work and dialogue with the SEC and FINRA, and embedding that workflow and process into electronic marketplace. So since then, I basically have been on this mission to basically make investing in alternative assets like crypto a lot simpler and easier. And that's kind of why I ended up at AVA. My mission and their mission are very similar. We see a world where one day investing in alternative securities is as easy as sending an email. And AVA, we have the platform, I think, that is scalable and easy to use. So business people can create these assets. And not only that, there's a great mechanism for governance that will allow people to do things in a regulatory compliant way.
Okay, so if I'm, a company that wants to use AVA to create an asset, how would I go about doing that?
Sure. So the old way was when you wanted to take your asset and you want to get it tokenized, you would go to a third party, and that third party would come into your office. They would ask you for the specs, and then they would create with their tech team a custom smart contract for that asset. That's how you would do it. At AVA, because we simplified the process and we made it easy to use, you are kind of now like Wix. You can drag and drop. There's a little hyperbole here, but you can almost drag and drop and you can create your own asset that way, instead of the 1990s way of hiring Accenture to come in because you figure out you need this IT infrastructure and they have to go do it.
Okay, I see. So would you say that that's the primary difference between AVA and other companies that are working towards asset tokenization, or are there other things as well?
That is just one part. And, I think what separates AVA from a lot of the other offerings out there is, besides the easy to use that we've highlighted, the core blockchain, the core engine, what we call the platform, is literally one of the most remarkable technologies out there. It's a whole new consensus protocol. I mean, in the history of distributed systems, there have been two paradigm shifts, classical and then Nakamoto. I think what the team here at AVA, led by Eamon Gunsier, the Cornell professor, has done is phenomenal, because it's a new consensus protocol at the underlying core of everything that allows scaling. And they've built it in a way that it provides the user to embed the governance that you need in financial services at the network layer, as opposed to the smart contract layer.
So does that mean that governance is handled by anyone who owns the tokens?
No, governance cannot be handled by the ones who just touch the tokens.
Okay.
So in the, let's do a little compare and contrast, I guess.
Yeah.
So the old way of doing it was you program the restrictions, whether it is accredited investors, and you do it on the smart contract, and then you have an off-chain whitelist that you figure out who is allowed and who is not allowed to participate. And then that's kind of set. Mm-hmm. That's on the contract itself. The way AVA structure it with, it's that all of that is done at the nodes on the network level. Okay. So the people who create this now can embed the restrictions and the rules themselves, as opposed to relying strictly on something that is code, which we know rules change, restrictions change, geographies in terms of who you want to transact changes, and it becomes a far more flexible instrument.
Okay, I see. So who are the nodes on the AVA network?
So that's determined by whoever's spinning up the marketplace or the blockchain. So think of the
Okay.
subnetwork as almost a subnetwork is kind of like your own little private blockchain that you at some point can connect to the other subnetworks and be part of a true permissionless system.
Okay, I see. So where is this in its sort of stage of development at the moment?
Yeah, so we're very excited because in April, we just went on the test net. So we released it, I think the first test net in middle or first week of April.
Mhm.
And over the last few weeks, we've seen validators, developers, and entrepreneurs all coming in and investigating the technology and testing the speed and flexibility of the architecture. So um, we are, in that stage, and then we are now engaging heavily with these early early participants and getting ready to deploy to the mainnet. And we're anticipating it midsummer.
Okay, that's very exciting. I want to ask you two questions. So, I want to know if AVA is really targeted toward any specific industry or, class of user or investor, and also who is so far, who's showing the most interest in this platform.
Cool. So as we said, we've been targeting the finance industry
Mhm.
and DeFi industry on the crypto native. So a lot of the engagements we've seen have been with players on the DeFi side, DeFi projects and asset issuers, and have been testing deployments on our testnet.
Mhm.
That's one group that's been very interested. And because, again, one of the core advantages of our blockchains, besides the scale, is that it has this governance embedded in it.
Okay, I see. So, congratulations, by the way, on on the launch in April and on the expected launch in the middle of summer. I want to ask you, given the timing with uh, COVID and everything that's happening right now, what kind of impact has the coronavirus had on what Ava is doing, if anything?
So Gun, myself, Kevin, who's a founder with Gun, we made a very quick decision in the early days that first and foremost, we wanted to protect the health of our team.
Okay,
So we enforced work from home policies, I think even slightly earlier than the rest of New York did.
nice.
And once that was done, and funny enough, we were truly a distributed workforce by then. But once that was done, we basically continued all the growth plans that we had. We were fortunate to be able to hire new members of the team, continue to deploy the technology and launch more programs to engage with the community. So in fact, if anything, I think we have excelled in this new environment.
Okay, that's fabulous. So what advice would you have then, for other companies who might be struggling a bit to sort of uh, move into this new paradigm?
So first, I think they should always think about the health of their employees and make sure that they are, safe. And then everyone on our team, luckily, was very technically savvy. So we already have the familiarity with the tools necessary to do video conferencing. We had all the software we needed, and we were very techy to begin with, so that helped out.
Mm-hmm.
Most of us had great connections and Wi-Fi already in our houses. So I think that the key thing, though, for anyone after the safety issue is to set up a process, and we've done this, where we still get to communicate with each other at least a couple of ways. One, we have open video and chat channels. We also have regular weekly, call it Monday morning type meetings where
Mm-hmm.
the whole firm gets in together and we discuss what we're working on.
Okay. Um, and I want to ask, maybe, for Ava and also more generally, has this changed the way that you maybe, even if it hasn't necessarily had any impacts on any of the road map or, the milestones that Ava has set out for itself, um, has this changed the way that you see like the future of Ava? And if it hasn't really changed Ava, has it changed the way that you see the future of sort of the cryptocurrency industry more generally?
I think cryptocurrency and tech have generally been groups of people and teams that were relatively comfortable with working in a distributed manner
Okay.
already.
Mm-hmm.
So people luckily in our industry have the easiest adoption of this current environment.
Right.
I think with other types of businesses where people facing constantly is part of the requirements of the job, that's where they're going to have to figure out new rules of engagement.
Right. Right. Okay. And also from the other side of things, so, the users of cryptocurrency and possible use cases, do you think that those have evolved as a result of the coronavirus?
So I think that's a very interesting question because that can be answered both on a macro level and a micro level.
Right.
So maybe I'll take the challenge first on the macro level, especially since I come
Okay.
from the world of finance. The amount of money printing that we've seen in the last 10 years is just phenomenal. I've never seen anything like this in my career. I mean, the Fed's balance sheet after 08, 09 went up to 4.5, almost 5 trillion. Then they started taking that down, and all of a sudden this happens.
Yeah.
So, I mean, the last I checked, I think the Fed's balance sheet is already 6 trillion plus. And if again, I haven't looked at the most recent numbers, but I'm just going to approximate, but the money supply numbers out there I've seen have from basically, roughly end of February to March have increased incredible. So the Fed's balance sheet has increased, I think, somewhere just under 2 trillion since February.
Mm-hmm.
The money supply numbers, which is really, cash or savings or marketable securities, very liquid stuff, is up well over 1 trillion. So out of this money that's being just put into the market, this is going to lead to very interesting results because when you have fixed supply things, and you have the actual money actually increasing as fast as it is.
Mm-hmm.
I mean, I can see a world where there's going to be asset inflation and fiat deflation, where your dollar is going to be buying things that have less buying power. Okay. So, I mean, what that means is you ultimately want to buy assets with finite supply. That'll be like gold, possibly Bitcoin, and it's no coincidence that my friends from the traditional finance world in 2008 or 9 didn't know about this. Most people didn't know about this. But even in the run-up in 2017, they viewed it very skeptically. Mm-hmm. But suddenly I'm getting calls from the most skeptic of skeptics asking more about how Bitcoin and crypto works. That's and crazy. Thinking of it as something that can protect them in a world where I just described as asset inflation and fiat deflation.
Right. Okay. So that's really interesting that you have like a firsthand account of people thinking about cryptocurrency in a new way. Because this whole status, the question over whether or not Bitcoin is a safe haven, and whether or not the events over the last 2 months have destroyed that narrative. I think have been on everybody's minds. Anyone who's involved in the blockchain industry.
Well, if you look at the asset classes that traditional institutional investors would allocate their portfolio, I think there's about, in this country, in the U.S., there's about 10 trillion of institutional investment out there. Yeah. And last I checked, studies I've read, hard assets, that would mean like gold or the timber, are at all-time lows. I mean, we're talking about less than 5% of their portfolios. Yeah. And this is, from double-digit percentages, 10%, a decade or 2 decades ago. And obviously that's a function also of the smart stock market and private markets having such great returns. So people have allocated over there. Yeah. Now, $10 trillion, imagine if they take that 5% allocation back up to what it was a couple of decades ago, call it double digits, 10%. And then if you just take 1% of that and you put it into crypto, I mean, that's greater than the entire current market cap of the whole crypto industry.
Right.
So from a macro level, going back to your question, there could be, and you're seeing it right now, great effects for this industry, and that will spur development, more people like AVA, more people developing on AVA, and it'll be just an incredible environment for everyone in the blockchain space.
Right. So do you think that, you know, are we about to see sort of like a wave of innovation coming?
I think the innovation on blockchain actually has not stopped. I'm saying there could be a second wave, an
Right.
acceleration.
Yeah.
So even though we had a crash in 18 and 19 in the prices, AVA was formed in early 2019, and they were developing stuff at Cornell, where we were first seeding all our ideas before that. So
Right.
development has not stopped.
Right. Okay. So yeah, it's kind of been moving behind the scenes, and maybe now there's like a sort of more public and reinvigorated wave of innovation coming.
That's right. And then I wanted to answer the micro
Yeah.
effect of
Yes.
this virus. So obviously, so to summarize the macro effect, because of the virus, job losses, economies slow down, the Feds had to print money. And in my opinion, that's going to have great ramifications. Don't know when or how, but at the very least, I think, asset inflation and your purchasing power on the dollar could be affected going forward. On the micro level, because everyone's at home, if I look at some of the stats in the online world, whether it be e-commerce or watching streaming videos, and I bet you if you look at Coinbase accounts and activity on their websites, more and more online activities happening. So this is also a micro positive for the whole space.
Okay. So what do you think, the role of DeFi is going to be going forward?
Well, DeFi is a growing application, and it's been actually a fantastic. And then unfortunately, we hit that March 12th, March 13th hiccup with MakerDAO. But what DeFi does is really unleashes the imagination of what people can do in terms of taking traditional financial concepts and products into the crypto space. Some of the biggest things in DeFi obviously are lending, stablecoin, and all of the ETH that's been trapped in the DeFi are from 3 or 4 categories. But all 3 of those categories are concepts that were taken from traditional financial industry. So ultimately, I think what DeFi does is it really kicks off the innovation engine in terms of letting people see what potential there is in terms of the public blockchain, how it can help with financial assets. I mean, I talked about it earlier. I was astonished at the size of the crowdfunding from the ICO days. And from what really got me, it was when I started calculating, typical bankers on IPOs, they make, call it 4 or 5% for doing that. And if you start doing 4 or 5% on the money that was raised in the ICO, then it became real money. And when DeFi starts getting bigger and bigger, and their products show that to the real, the traditional financial people, the potential in making money, that's when they're going to all want to jump over.
Okay, I see. Yeah, because the question, DeFi sort of exists like not I won't say it exists in a vacuum, but it's something that hasn't really been adopted yet by the traditional financial world, even in the way that other aspects of the blockchain and cryptocurrency industry have.
That's correct. And I think there are certain things in the DeFi world that the same things I saw what happened with the ICOs. Like it is the problems in technology can be solved. These DeFi instruments will also have to be compliant in terms of regulatory requirements. So people haven't even really thought through each one of these DeFi projects and what the ramifications are in terms of how it will affect regulation, or how regulation will affect them, I should say more accurately. And again, I think that's one of the benefits of the AVA platform ultimately, because the way our platform is set up, we make it very easy to integrate restrictions into the network layer, allowing people to be more compliant, have governance, and comply with regulation.
Okay, so can you talk a little bit about the plans for AVA in the year ahead?
Oh yeah, absolutely. So, well, first and foremost, we're still, getting more engagement into our test net right now.
Mm-hmm.
But the most immediate thing will be the mainnet launch. And once we have that done, we really want to build a great platform and provide tools for a entrepreneur who is from a domain expert in finance plus a entrepreneurial techie developer. We love for them to get together and unleash their creative juices using the AVA tools and AVA platform to create new products, to solve inefficiencies in infrastructure that is out there in other in financial markets.
Mm-hmm.
And once they start doing that, AVA will just hopefully accelerate even more and help people create more products. And ultimately, the goal for AVA is very simple. It is just to build the tools and the platform to enable a lot of growth in the and create efficiency in financial products and DeFi.
Okay. John, I want to thank you so much for your time. It's been so interesting to talk to you.
Awesome. Thank you.